Okay, great everyone. Welcome back to workshop 4, where we're discussing increasing your profits with accurate costing and pricing. We've had a good breakout discussion already on this theme, and we can start discuss those things. Thank you everyone for your participation. I think it's starting to work well for us to have the breakouts, compare notes, learn from each other. But before we start with some really powerful input from content-wise, things that we can then go and use and test with our coaches' help too. So, of course, Inati's hand dropped now, but we can come back to him if he still wants to speak. Room 9, where Lunga was, said that if we look at the question that we're discussing, how can we refine costing and pricing to make our businesses more profitable, that we must understand our cost. And then we must calculate the production costs, and then we add the margin. So once you know your total production costs, you can add a margin, and then you've got your sales price that you know will cover what you need to cover. Lunga, great. We're going to talk a bit more about that, and Coach Patricia is going to share some insights with us in terms of that method. It's definitely a method that a lot of people are using. Kanya is saying identify the cost. Yes. Directly linked to specific cost objects and reducing cost distortions, sort of also to investigate, what those costs are they putting in and indirect costs. There's direct costs relating to the production, and then there's indirect costs, bulk purchase discounts, look into pricing, discounts that you can get for your materials, and then how you mark up. That's from room 2. Thanks, Kanya, for sharing that. Zama from not sure what room. Costing, note all costs involved. If we don't know what all the costs are, it's very difficult to actually make that cost calculation, so there's also a bit of record keeping, accurate record keeping involved here. And then adding the markups. I see Patricia shaking her head, so then we're going to come to more of those things just now. Bulk buying can save you, sort of things, and fund cost structure to gain profits. Regard less of a price in fluctuation. Okay, we'll see what that implications of that are. And then Bongi Kosi in room 10, making combo for my clients. Okay, so actually seeing how you can offer a product, something maybe new, that where the cost structure may be better, or where you can charge more, add quality to what you do and you can charge more. Create monthly bookkeeping services for retainers, add monthly subscription fees, dynamic pricing, so they're all different kinds of things, many of them relating to the information that we have. So how confident are you accuracy of your information? Thanks, Marky, for your comments there too. We're talking about fixed threes and debt collection and so on too. Introducing new services. George in room 6. Reducing costs, get bigger car in case if transport is okay. So preparing for the future. Nokwetemba in room 11 was saying decreasing the price to eliminate competitors. Okay, so that's an interesting one. Patricia, I'm sure we'll talk a bit about that. Sort of the pricing strategy. When is it good to reduce your price? And in fact, when may you be underpricing that you could ask a better price? Musa, will come to you just now to keep your hand up. Kagiso was saying, know your fixed costs, variable costs, and so on. And then Ziyanda saying, add markup to the product price and standardized operational cost. Yeah, sort of, so know your cost and so on. Now I want to, before we get to you, Musa, ask that you type into the text chat in a percentage out of 100. How confident are you that your information that you have around costs is accurate? A number out of 100. You can in the text chat. How confident are you that it is accurate? Bongi course is 80. Musa, you can keep your hand up. We can ask you to speak just now. Staying there at 80, 85, 70, 75. And we're not doing too bad. Pass in the exam, I think, even get a distinction. 50% maybe on the fringe, maybe there's hard work to do. So, by the way, this is that we can discuss with our coach too, sort of what are the steps that we can take to make our information more accurate. Because if we start with wrong information, We can do a break-even analysis, but it will be a wrong analysis because our information is not right. So there's a big step for many of us to take. So please discuss that a bit with your coaches too, and figure out for yourself perhaps, or share with your colleagues here in the room, ways to have more information more accurate. This morning for the Entrepreneurial Planning Institute, I was in a short meeting with the accounting officer, and we're putting in new rules in Sage so that he doesn't have to go assign line items for accurate reflection in the accounts. You can set up the rules to do it automatically, so it's perfect. So those kind of things we can also look at, of course, as we go along. Okay, Musa, do you want to come in now? I see your hand is dropped now, but you had it on for a long time, so maybe
you said you're still going to touch on it because it was a question regarding price decreasing, and when is it a good point where you can start decreasing? Because what I saw was the foreign nationals that came into our neighborhoods and they started building tech shops, because previously we had tech shops of the people that are from the community, right? And what they did when they came in, they decreased the prices of the same products that were sold by our people. And then later on, when they eliminated them, they started matching the prices that the people that had the shops before were selling their products on. So with our strategy coming into a new market where we have traditional construction material made out of concrete, where we've had a relationship with it, knowing what it does and how it is sustainable going forward. And we're coming in with a new product, which is like plastic. So we wanted to actually decrease our prices, probably say around about 150 to a rand per brick, and then try to see and test the waters of the market. And then when we get the trust of the market, that's where we're going to start increasing our prices to match the traditional way of pricing the construction material. But you said you're still going to touch on it.
Yeah, we will touch as much as we can. Of course, each of our situations are slightly different. So that's also why we're not only having the workshops, while we also have the support of our coaches, and why we are WhatsApp group together, because we can learn in all of those. While we have the peer forums, all of those are learning opportunities for us. And of course, there's YouTube and all these other places that we can learn for free too. So, but yeah, pricing is not only to do with calculating your cost and putting up your markup. There's more involved here. Although if you don't understand that, I'm sure, Patricia, maybe we can allow you to come in here now. Maybe I'll just introduce you quickly. Patricia, some of us, a few of us, 3 or 4. How many coaches do you have, Patricia, in the program now?
Just 2.
2. Okay, 2 yeah. Fortunate. One of them will be today. Patricia has also coached on the program before. So, program coach, apart from what you do here today with us, Patricia, what does your working life look like?
I run a business also. I'm an entrepreneur every day. I'm counting my costs and looking after my profits. I'm an entrepreneur in the space of socioeconomic development, entrepreneurship development. I work with entrepreneurs. I mentor. I was just over a month ago, I did a calculations of entrepreneurs that have gone through our company. They are close to 480 to date since we started in 2017. That is entrepreneurs that we've mentored or trained or engaged at a coaching level. So it's been quite an amazing journey, the learnings that I get from entrepreneurs. So it's always a two-way street. You share what you know, but you get so much from the businesses because you also reflect on your business as you talk to other businesses.
Yeah, great. And entrepreneurs supporting and entrepreneurs. So, Patricia, I'll hand over to you now. So our topic today, as we've shared already, is increasing my profits with accurate costing and pricing. We've already noted that there's much more involved in determining a price, than just calculating the cost, adding a markup, etc., which are things that we will cover here today. We won't cover the full extent of each of our industries. We won't, those pricing strategies. Musa spoke about that competitive pricing strategy where you maybe undercut in your pricing for a certain time and there's a lot of other stuff in terms of connecting with your customers, getting the market share that you want, and so on, that are involved in costing and pricing. But doesn't it all start, Patricia, with us knowing what basics are, what the break-evens are, and so on, these things that you're going to talk to us about? Okay.
Thank you, Christo, for this. I think just riding on what Musa Nkosi was asking regarding the pricing issue, where you can reduce your price. I think what I would say at this stage, Musa Nkosi, is that if you know why you started a business to make money. The essence of a business is it must be able to generate income, revenue, and create money wealth for yourself and all the shareholders. So the strategies of whether you are undercutting your competition and as long as they make business sense to your objective of making money, generating revenue, then they are internal business strategies. So in essence, I think today will help us have the tools that will help us know how to make money, as in like, what are the things that need to be in place? How do we calculate? How do we know how many units do we need to sell to be able to say we will be profitable? Because we will then understand, what does it cost us to run this business, to deliver this service, and. So all those things will give you a capability of then deciding at some stage to say, I'm entering this market, and there are old players, not old as in age, there are players that have been there longer than you. How do I undercut them, maybe price-wise? And some communities or some environments, customer segments, you come in with a price that is low. They will be, because they're not price sensitive, they will worry about the quality if your price is low in a particular sort of customer segment. But other customer segment that is price sensitive, they may a cheaper product, but are you as a business making money? So those are the conversations you have with yourself. But what today is going to give all of you is just the understanding of the concepts, which is the most important thing. Understand the concepts around pricing and costing, but what it is about these concepts that you can do to make good business decisions, because it's about the calculation, yeah, right? But it's the good business decisions that you then make afterwards. Until you have this information, the decisions are, I guess, thumbs up generally. That's what we say. So today we're going to give you those principles and show you the basic easy ways to calculate so that you can make money. And please note that once you are able to determine your profits, what it is you need to sell, how many units you need to sell, how efficient is my operation needing to be running to be able to make a profit, you can then make a judgment to say, look, this is a profitable business. I just need to do this and this and this and this and this. And that's what today is about. There will be an assignment at the end that will be shared, assignment 4. Obviously, you want to submit on time for the busy bugs. I was hoping that as a coach who also trains, I might get busy bugs, but hardy for me. I was told I cannot. So take advantage, submit the assignment, but the nuggets of the assignment are also captured inside this training today. So basically, I did mention we are all about giving you capabilities to know when and what needs to be done in your business so that you are profitable. You obviously will have a product already. So we're dealing with a product or a service, and how do I cost my product or service? You would have done the business model canvas last week, and you looked at value, creating value, the value proposition. You looked at the side, the one side of the canvas of the 9 pillars. There's the one side that is revenue. There's the other one that is taking money out of the business, but they both sides work together. All 9 pillars need to talk to each other. I see Christine says she has a question. Yes, Christine.
Hi, Coach. I wanted
Hello.
to ask about, there's this thing, Mina, I stay at a township, I'd say that. So there's this thing that I hear a lot of business people talking about in my area, that you need to consider where you are before you charge. You cannot charge what they say to me. So I'm telling you, they say I cannot charge certain prices because I'm here. So I'll make a loss. I'll have to consider where I am and then charge. I don't know if that makes sense, but that's my question for you, Uti. How do we go about tackling that?
Yes, just because it's not totally out of topic, I'm going to respond to it. But it goes back to what you learned last week, the business model canvas, the market or customer segmentation. Remember, when you start a business, you don't start it for your locality necessarily. You're starting it because it's a product or a service that some customer wants. Once you've identified which customer wants your product or it's a need for, then you will be able to align your marketing strategies to that segment of a customer. So again, when you have conversations like that, sometimes it's a reflection to say, are you selling to the right market segment? Have you segmented your customers, or you are just hoping that everyone you meet in the street will buy? So I always say it's like bread in the shop. When you walk into a supermarket, you find that there are many brands of bread, but each brand, you find everyone who walks into the shop to buy bread, they don't necessarily go around and look Blue Labels, whatever the different names, Sasco. People go for the things they want to buy. They will go for this, and you wonder, why is this one going to the other one and the other? It's because each product has a customer. It doesn't matter whether it's the same product. So your business, go and revise your your customer segmentation, and you'll be able to determine, is your customer based in Sandton? And also sometimes pricing is not the location. Pricing is who are the people who put value in what you are selling as a product. So that value proposition. I can see someone wants to add, Kahi, so I'll allow you to add at some point. Can I take on my topic so that if it doesn't get covered, we can always come back to discuss. But I think we will have a chat, a conversation, a Q&A where we can maybe expand on that. I just don't want to then have to rush on with delivering the content. So the themes that we're going to look at today are about what it is, what costing is really, and also why is it important. You will get to learn, it answers some of the questions with, should I reduce, should I increase? And also we're going to be able to determine what goes into a selling price. What makes the selling price? Is it something we go into the market, we go to customers and find out, suppliers, other suppliers, and say, you're selling an apple, I want to sell apples, how much are you charging? Or is it going to go to internet and Google and find out who's selling an apple? But there are many things that come together. But the question is, we're going to look at how I determine my business selling price. We're going to talk about the markup principle. It's a principle of costing. We're going to move and speak about gross profit, but looking at gross profit and what it serves in my business as a business owner in decision making. So all these things are linked to ability to calculate them, but what it means in making decisions and making my business profitable. The same thing with the net profit, value added tax for those that have signed, registered as VAT, who registers, and what is the value, what is value added tax, what it is, and how you are supposed to, when you are compelled to register and when you are not, and what it means if you have registered for value added tax. But also you are a buyer of products, so you will, as a business, also incur value-added tax because you will pay tax to your suppliers, and how that works. So we're going to share with you that. And then the last thing, but it's not the least, the break-even analysis, which Christoph also mentioned earlier on, and we saw a lot of comments around it. But more so, it's not just knowing that, okay, I'm at my sales are equal to my expenses, I'm good. But it's more like, what does it mean for me as I try to make my business profitable? So we're going to look at the break-even sales quantity, how you calculate it, how you estimate that if I sell shoes, these are the number of shoes I need to sell to be able to be profitable. So on the chart, it's just a quick one. Now that we've spoken about so many things, maybe someone wants to put all of us on the chart. How do we know if we're charging sufficiently or we're overcharging, or our price is just right for your business. So it's individual, just your comment. Am I charging right? How do I know? Am I undercharging? How do I know? How would you know these things? If you can just put our comments on the chat. If I don't see comments, I'm going to pick on a few people.
Good day, good day.
Hello?
Yes, yes. Let me give it a try. How do we know if we're undercharging? I think when it comes to me, how do I know that I'm undercharging? It's when maybe I've spent a lot of time on a certain service, because mostly I am a graphic designer on a certain project, but then I don't make any profit from it. You see, I'm undercharging because I didn't consider in terms of the time, maybe especially the time that I put in the project. You see, so overcharging, I think overcharging it's when, how can I put it? It's when maybe a certain service takes you less time to do it, and then you overcharge a client knowing that it's just 2 minutes, and you overcharge. You see, that's maybe that's how I see how you recognize overcharging.
Okay, thank you for your input. There is no one sort of uniform answer, but the tools that you're going to get today will tell you whether you are pricing right. Then marrying to that, it's your market or your customer segment that will tell you, for this segment, are they my segment? Are they price sensitive? Is it the price? Or you look at suppliers of this other competition in that space, and you look at all those things. But at the center of your charging should be your business operations costs. You should be able to say, I can efficiently run this business, put everything efficiently, and buy efficiently from suppliers in such a way that I know this is for this product. This is the baseline price I can charge. And then you look at industry, you start looking at comparing industry. Again, that also tells you that if you are in business and you find that you are unable to price for the kind of customers you want to get into, you have to reflect on the service or product. Is it the right product or service? And Kosimpile, I see your hand. And thanks for the comments, guys. I can see you guys, Bonkosi, Lunga, Fundo. Kosimpile.
Oh, yes. I just wanted to add as well how I see when I'm undercharging, overcharging, and charging fairly. So normally I find this funny because when I undercharge, I tend to have more customers coming in for the same product that I've done for someone else than when I have overcharged. I don't get the number of customers that I got previously as I undercharged. So when I'm pricing fairly, it becomes more of a trick because now I work in between the line where I have to convince a customer to really buy, or I'll just let things take way on their own. So that's just how I see by when I introduce the price to say, okay, this is the price I have, and the customer is happy, I can see that, okay, at least I've done better on this one. But when I don't have customers, I know I've overcharged. When I have more customers coming in, that's when I tell that I'm undercharging my products.
Okay, Nkosimpile. Thanks for sharing your case. Again, it's case by case, because if we dig deep, I hope your coach can pick on this. If we dig deep and want to find out, at undercharging, does it mean the business is making a profit or making a loss, or is it a period where you're just drawing customers into the business, or it is the correct price, you just priced correctly at that point in time? So the conversation is really, you need to know the nuggets that formulate the price. So this is why we have the topic today. So we're going to go back into detail about that. So we're looking back at the concept of, we'll use the artisan trade. Generally, you find that if you hire a electrician or a plumber, they come to your house and they start, when you ask how much, they take a back of an envelope from the cubby hole, and then they start calculating and saying, oh yeah, this is this and this and this and this. We're looking at that principle of saying, let's move from back of the envelope. It's not about those scribbles. It's about actually a thorough analysis of certain things. These are your costs of the business, how much it costs me to run the business. And then we look at the costs, breaking them down. There are indirect costs, there are direct costs. These form part of deciding my selling price. Once we know our selling price, obviously we will then say we are here to make a profit. So we'll determine to a markup and say the markup could be. And markup, this is where the answer around going to market to find out. The markup is the negotiable portion of your selling price. The cost side of the selling price, everything that's a cost of operating and putting this together cannot be negotiated, because if you do, it means you are not going to make a profit. You are operating at a loss. It's only at markup then you start having a conversation to say, all right, I use a 20% markup purely because my operating expenses are sitting at 5%, and the 15% I can play around. And when you go to market, you find competition and you want to hit back on competition price, using price, you can step back a bit on the markup portion, not on the cost. So it's important to understand your business costs so that you can then determine at what stage can I compete and say I compete with people who charge low prices. Or maybe they're not, the customers that you're attending to are not necessarily the customers you should be focusing your business offering to. So how much is my product? Costing is about knowing or managing the way you understand how much our product is going to be, or our service, when we manufacture it. What does it cost us to manufacture or produce or deliver a service? So we're talking across manufacture, produce, or deliver, because some services are not necessarily we buy something and we resell. So we have other costs that are associated to resell. Some services are our professional skills that we are selling. So it's along those lines. So when we do costing, we're trying to monitor and see how these costs are managed. What are they in the first place, these costs, and how we manage them to be efficient. And you will understand now that when we say we want to be efficient in the business, all we're trying to do is to say, if competition is pricing this much and we need to get there and cover all our costs, our running costs, the operating, the non-direct costs need to be efficient in such a way that we still make a profit and we also are able to compete with competition out there. So it's very important. So costing is about that holistic conversation where we're going to look at the different elements. Why is it important? I've said it again, to be able to determine if the business is going to make a profit. If we get an indication that if I cost this and I find that this is outpricing the market I'm targeting, I go back to one of you, I can't remember who it was, where you said, what if I find that I am charging, everyone is saying I'm charging certain prices in the township. That's exactly what it is. It shows you the picture that maybe your customer segment is not the township. As long as you can justify that I've efficiently costed my product, my operations are efficient, and everything else is in place, maybe your customer segment is indeed not the township customer segment. Because why would people buy from something that they don't derive, they don't see the value that you're presenting to them? So anyone buying, they feel there's value in that, and pricing becomes a secondary issue. So it's very important. So we're going to look at a whole picture of your direct costs. How do you know which ones are direct costs? A lot of us as small businesses don't know what direct costs is and what indirect costs are. And we're going to try and unpack that. It's very important that we can separate those two in our business because they determine how we decide on our selling price. The other thing is costing becomes our sort of foundation for a strategic decision. I spoke about decision making as business owners. We are in business, we have to make decisions. We make decisions about the customer, we make decisions about where we want to compete, we want to make decisions about many things. We want to be able to make decisions about our pricing strategy, decisions about what costs are we going to run the business and how do we manage those costs. We're going to make decisions about how we deal with competition, not that we go and change anything that competition is doing, but how we compete in the market. So these are the things that are important about costing. I want to also just quickly go onto a random ask here. Anyone who can name one direct cost of their business, please unmute yourself. I just want to get a sense. Do you know what a direct cost is? But I want you to name one direct cost of your business. And direct costs may differ business to business. That is why I want just anyone to unmute themselves, get a chance to name. I see Bonginkosi. Do you want to give it a shot?
Yes, so I think for me, it's Wi-Fi because everything I do, it's on internet. So which is I use Wi-Fi to record the transaction for the clients, and I also use Wi-Fi for filing the annual return for my customers.
What is your business? What is your business?
So we provide bookkeeping, payroll services, and business registrations.
So the product is what's your service? Sorry, give me one example of your service.
Bookkeeping.
So if I come, if you are going to a client, you're selling, I'm selling bookkeeping services.
Yes.
Okay. All right. You will get to learn today that what direct costs is what will make the bookkeeping happen. And you can directly calculate and say, in this, I spent so many units of megabytes or whatever it is, if it was Wi-Fi in this example. And I'm not convinced where we are now that Wi-Fi is a direct cost. It is a cost of running operational costs, but I'm not convinced it's a direct cost, but we can have a discussion about it. Somebody put on the chat that ingredients to the food are a direct cost. Mangaliso, I see your hand, Msawenkosi. Mangaliso, do you want to expand on ingredients to your food, to the food?
Yes, ma'am. It's mainly the nuggets, the rations, all the food products that we sell on a daily basis. They are the direct costs because we have to sell them on the specific day and also rebuy them again.
Okay, and the gas stove that you cook with?
That is usually
the cost
on,
of electricity. Sorry.
We use gas. We use a gas stove, and it lasts for around 3 months usually. That's why I didn't put it as a direct cost, or maybe it is.
I like that you say maybe quickly thinking about it. Think about it. Will the ration be complete without the cooking? So if I cook more this month and I cook less next month, will the gas utilization differ? That shows you it is directly linked to delivering the service. Does it make sense? Musa Wenkos, you had your hand up.
Yeah, so the question with like the direct costs and indirect costs. So I'm not too sure if we can call it a direct cost, but our business is mainly dealing with recycling and / construction materials. So we use waste materials such as plastic and bottles into creating paving bricks and your building bricks. So I'd say that our direct costs is basically paying the waste pickers and fuel for us collecting plastic and bottle, and also the maintenance of the machinery that we're going to be using at the time. Yeah.
Okay, thank you guys. You've shared elaborately. Thank you, Msawe Nkosi, and you've shared elaborately here. Mbali, I will take your hand. You'll be the last hand I take. Please be brief and get to it for me, because we're going to have another chance for Q&A. Mbali?
Okay, thank you so much, ma'am. My direct cost for my business is the manufacturing product that I use to produce my hair product.
Sorry, I didn't hear you. What did you say your direct costs were?
It's the product that I use for manufacturing.
It's a input material, the raw material. Okay, all right. Thank you guys. I can see all of the, keep them coming, because we're going to have another conversation later where I will see some of you removing some of these costs or adding more to your direct costs. But I'll just unpack what direct costs are. And I did mention that they sometimes do get called variable costs purely because some of them are really, or most of them are, because they are around producing the product or the service, they are linked to how much you've produced or how much you've got to go, you've sold in the market. So they are linked to your ability to how many products are made. So if we look at direct costs for making fat cakes, for example, we would take flour. So if you buy a 5 kg and the 5 kg makes 100 fat cakes, and then one day you make 50. So it shows that the flour, you won't use the same units for flour or volumes for flour as you used when you baked 50. So that's why they are called variable costs. So in the direct costs, we look at materials. You've all mentioned materials, the direct things that go into making the product or making the job doable. So if you are an artisan, your step ladder, and your trip to the climbing up or a plumbing journey, all those things become your direct costs. Direct labor, these are wages of the people who put this thing together, the service together. So as a professional, a plumber, your labor or the people who deliver the service to the customer. And the wage would be the wage of how many blocked people worked on that blocked drain. So it would be the wage of those people, but not necessarily the wage of the manager sitting in the office. If you can apportion a portion of the manager's wage, you can, but generally it is the people who do directly the service and deliver the service directly. Specific transport costs, we say specific transport costs because not all transport costs. My travel as the manager to come to work is not a direct cost of doing my business, but when I travel specifically to a client to do work, that becomes direct costs because it is linked, the volume of the travel in my business is related to delivering a service. So you have specific costs. So in a nutshell, direct, you have to be able to link them to the product or service that gets available for a customer. On the other hand, there are costs that we call indirect costs. And these ones are the ones that we call them costs for running the business. They are operational costs. They exist whether I am selling a product, whether stock has been bought or not, whether I've gone to see a customer or not. These costs have to be paid. These are rent, these are maybe some salaries, certain fixed costs that exist in the business. These are telephone calls. The number of telephone calls I make a month is not linked to the number of customers I eventually attend to, but telephone bill must be paid. So these are what we call indirect costs, and they are overheads. Regardless of how you've done your service delivery or you've produced these costs, the volumes are not altered. So these ones we call indirect costs. It could be cell phone, it could be rent. They cannot be linked directly to whether I have sold to a customer or not. So having said all of that, why we need to know the costs is that these direct and indirect costs form what we call the total cost of our business. So the selling price is made out of looking at all our costs and then considering what we call the markup, which I said it is the extra that we bring into the business. Once we've looked at that, we then know that this is our selling price. So we're going to quickly look at the three elements of the selling price: the markup and the cost price. Selling price, we did say it is made out of the total costs. In technical terms or accounting terms, we sometimes call it the cost price. What did it cost us to be able to generate or deliver this service? And then it is added to what we call our markup. Our markup, we can do a markup by tracing industry, seeing what customers are using as a markup and checking what people are charging. And some questions would be, how would I know if what my competition is charging, which part is markup and which part is not? Knowing your costs and knowing how it costs to do a business, once you've streamlined your costs, you'll be able to determine that, oh, if cost for putting together this service is generally 550, but my competition is charging 650, you then be able to determine that, oh, okay, look, that sounds like the portion of their markup. And industry benchmarks, if you're in industry, you can look for benchmarks of what markup is in your industry, and you get to know. Like in our industry, you know, if you're doing a project, there's a percentage for project management fee. It's a standard industry fee. You play around that fee, and you know that this is where your markup should be. So what's important is knowing these three important equations, guys. It's one equation rolled out, reversed in many ways. It's like wearing reversible socks. So if you look at the first one and understand the first one, the next one will make sense. So let me explain to you. So my selling price for my business is equal to the cost of producing the thing, which we call the cost price, plus my markup. So if I had the selling price and the cost of the product, how would I determine the markup? So let's do an example so that this makes sense when we look at the figures. I would like at this stage, when we do the calculations, I would like you guys to stop me if you are not understanding. Let's do an example. Can I have the next slide? Before we get to examples, sorry, I wanted to just clarify one thing that is linked to someone who said earlier on, work on my pricing strategy. They spoke about, it was a software subscriptions model, personal subscriptions model. I want to explain that today we're going to talk specifically about one particular pricing strategy, which is the simplest and the one that most small businesses and many businesses actually use that, the one that is called a cost plus pricing strategy. So this one that we're going to do a calculation is a cost plus pricing strategy. It is simple, it's commonly used. It is looking at our costs and then we add a markup. So that's the conversation today. It doesn't mean it's the one and only strategy. There are other strategies. If you could roll to the next slide for me. There are other strategies that we could look at that are linked to an industry, subscription strategy, various other that you could look at. But today we're going to look at the one that looks at the costs and we add markup to it. So this is our pricing strategy. All right. So I said we're going to look at the example because the formula is one. It just is movement of the elements of the formula. We need to understand what the elements are. First, there is the element of the selling price, which we want to determine. In the selling price, we said it is made up of the cost of producing, which is cost price. And then on top of the cost price, once we've determined all the business costs that we need to produce that make this thing, we want to then add what we call the markup. So cost price plus markup gives us the selling price. So when we want to know what markup are we supposed to be using, and we know they were given that this thing costs us this much, and that thing costs, is selling for this much. So how much would be the markup? So I've got an example here. You manufacture a bag for 160 Rand. What do we call that 160, by the way? Anyone who wants to raise a hand or just unmute yourself? What is that cost of manufacturing the bag of 160?
It's the cost price.
It's the cost price. Well done. Thank you. And then we sell it for 220 Rands. What do we call that 220?
The selling price.
Slim
The
price.
markup.
Huh? Who said markup? They must stand up. Who said markup? They need to stand up. Own yourself. Who said markup?
It's me. It's me. It's me.
Yeah, I need your name. Is it you, Kagiso?
Yes, ma'am. Yes, ma'am.
Okay, hold on there, Kagiso, because it's not the markup. Okay, I want you to pay particular attention. Yes, it is the selling price to everyone who recognized it as the selling price. We are going to be calculating the markup. We have the cost price and we have the selling price. So here is an example. You can see you start with your markup is equal to selling price minus the cost price. Do we understand why we're subtracting the cost price from the selling price, by the way?
Yes, so that we can be able to see how much profit we're making.
How much markup was put on that, right? Exactly that. Okay, guys, so you need to understand what they mean. So we need to be able to see how much markup was put to get the selling price. So we need to separate this cost from the selling price, then we'll determine the markup. But what's important is to know the markup percentage, because that markup percentage, when we go to market now, we find in competition, I go back to the township example, and another example, that you find competition is charging less, and you're wondering how to effect that, or should you respond and charge lesser? You need to know your markup percentage to look at it and say, okay, if I'm sitting with 37% markup percentage, and I've covered all my costs, I've covered all my business expenses, this is exactly how it looks like. I want to go and compete using pricing now. This is where you can then make that decision and say, okay, I'm going to be cutting down price for the next 30 days. I'm going to be selling my product. Instead of selling it for 220, I'm going to sell it for 200 Rands. Because I do have some flexibility when I look at my markup percentage. Does anyone want to quickly calculate for us? If we were to sell this for 200 Rands, if we were to sell for 200 Rands, we were going to work with that. When we do the Q&A, we're going to focus on working with an example saying, if I go to market now, I'm using a costing strategy now, a pricing strategy. If I reduced my markup, what would be my entry price in the market? Can I have the next slide? Once we've calculated all that, it makes it clear now that we understand we can calculate what the selling price is. We understand we need the cost price and the markup to know what the selling price. If we want the cost price, we need the markup and the selling price. So the calculations, thank you, George, for that. It gives you the ability to make those decisions. I think the essence of these slides or this topic is that you are able to then make informed decisions using facts of your business, not just facts in the streets. So we can move to the next slide. So it gives you the capability really to be able to tell what is my selling price and what is not my selling price. So as far as we've gone, we have covered and we understand now the decisions that you'll be able to make. Crystal.
Yeah, Patricia, thanks. I think the important thing is to apply that to ourselves too. That is why we have the space for the coaches. So if there are still some things that we don't fully understand, coaches are there, and we've got the WhatsApp group, guys. So don't feel intimidated if we're not fully into what the percentages and markup are. So, but we still have quite a few things to cover around profit and value-added tax and so on, Patricia. So may I suggest that we keep the questions till later, and we can then go into more depth around them, and we can carry over the questions into the WhatsApp if there are ones that we can't address if we don't have enough time today. But there are some important ideas that I know you want to share with us. So perhaps if we can focus on getting through those, and then we have enough time for our guests, to one of our participants, to discuss a few things.
Awesome. All right, we move from there. Now we are able to make those decisions. We're able to see the cost structure, the markup. We then want to use another sort of very important tool in our business, the gross profit, to determine whether the business is making money. The gross profit is looked at over a specific period. Obviously, you look at that, you'll have gross profit from January to June, or from January to December, or a month's gross profit. All that is for you to be able to see how you are doing within your selling. It is looking at your ability to produce the product, your efficiencies around producing it, and how it affects the sales. So it's a relationship of your cost of sales and your sales. How much money is left after producing this and putting all the costs of producing, once I've sold it, from the sale price, how much money is left in the business to cover the other running costs? Because a business is sustained by our sales. So our sales, the conversations around our sales is that we have the sales, and once we have sales, it must be able to cover all the business expenses. So the gross profit tells us how efficient we are running our business in terms of the production or the delivery of the service. It looks at our efficiency around that. It is also forms part of determining whether the bottom line at the end of everything is our business going to be profitable. Because if our gross profit margin is low, and we are unable to cover our operating expenses, it is clear that we're not going to make a profit. But if our gross profit is high and we have enough room to cover our costs, the other running costs, then we are able to make a profit. So it is a good indicator to tell us from the onset that, look, it is costing us a lot to deliver this service. When it's costing us a lot to deliver this service, are we doing the right thing? Is it the right service we should be involved in? Is it the right product we should be involved in? So it's not about who's charging what. It is about how our business can sustain using that method. So if you can move to the next slide for me. So a typical example is that you can see you manufacture a product and the sales are 2,200. The cost of manufacturing those products is 1,200. So what we call the cost of manufacturing, which are our direct costs, guys, we go back, it is our direct costs. They are 1,220. So gross profit will be our sales total minus the cost of manufacturing or producing or delivering those products or services, which is our gross profit is in this case 800 rands. So to get the gross profit percentage, we just use the percent to calculate a percentage. Do we all know how to calculate percentage? So if you can just put on the chat the calculation of this gross profit percentage in the chat for me, for anybody. But what's important with the gross profit percentage is that that gross profit percentage is also something industry, whatever industry you are in. You would go to that industry and look at their statistics. Their benchmark there. You will find that there is a sort of, in this industry, a 40% gross profit margin is a healthy one. A 38 is not so bad. A 25 is bordering red flag. And so your industry will then, you'll use that to also determine how you can compare with industry. So we can move to the next slide, please. So once we know, I was hoping I'll be getting that percentage there for the gross profit calculation, is that 36% gross profit margin. So it is 36%, and it is looking like this business has what is left from producing a 36%. What does this mean? It means that 36% retained in the business. Our operating costs cannot be over that 36% if we want to be profitable. So any other costs below the cost of sales, all those operating costs, administrative costs, need to be within that value of that 36%. So as a business owner, you start making decisions right away to say, okay, I buy these things, I sell them, my gross profit margin is only 2%. 2% may be 10,000. If 10,000 and my operating costs are sitting at 25,000, there's a wrong picture there. Already, my business is struggling just from looking at that. So the other tool to ascertain profitability is your net profit, which becomes the bottom line. So you saw my hands were moving up and down. The olden days, there used to be like the drawing of, at the top is your income, the cost of sales, your gross profit, your operating expenses, and then the net profit at the bottom. That is why the net profit is sometimes called the bottom line. The net profit is an overall picture of whether the business is profitable or not. This means the business, the products or the services, your sales are able to cover all your business operation, your business costs. They're able to cover the cost of delivering them, which are direct costs. They're able to cover the cost of running the business. And they leave what we call profit before tax. That figure that is profit before tax is that figure that then the taxman looks at what is taxable, and then tax is charged. And then the net profit is then, after that, you have what you call the net profit after tax. Tax has been charged. This is the money that the business can decide, okay, we've made a profit this financial year. It means we can reinvest in the business. The shareholders can decide whether they want to share dividends, or they want to invest in another opportunity, or they want to improve their product, or they want to bring in a new product. So that net profit plays a huge role in deciding your growth of your business. So the net profit's value is that. So I've said about the net profit, it is an ability to ensure, to measure that the business is successful, but to also determine future growth potential and investment opportunities. So if you know the net profit, the gross profit, you understand your direct costs, your indirect costs, and what is your business markup. Where we're sitting today, you won't doubt whether you are undercharging, overcharging, or just charging right. You'll be able to determine that. Then there is the sort of nice tool to know, very nice tool to know, because it is one that tells you if my business is covering all its expenses, covering the sales of the business, are covering all its expenses, and I am able to be at zero, then the business is running, it's sustainable in that sense. But you cannot carry a zero profit or zero growth of profit for a long time. But you can run a business in that state in seasons. Say the season where the control is external, the issues are external, like during COVID. All you aim for is to make sure you have your sales can pay all your running costs, your business expenses, so that the business survives. The break-even point is where you'd rather be at than be at the red. Which is a negative situation, because if you carry negative losses, you may have to take drastic decisions about the business. But with break-even, the nice thing about break-even that is very important is that you can make special decisions also. The one big decision is to understand, in my business, I am getting zero net profit and zero net loss. So I am not making a loss. What does it mean? How can I change the situation? You can use the break-even point to determine what sales I need to make to be able to go over the tip and get to profitability. You can also determine what's going on with my costs. Can I do something about my indirect costs, the ones that are within my control? Is there anything? Can we reduce our telephone bill? Can we reduce employees? Can we change a few things, a few major decisions that you could do around costs, as long as you understand where your break-even is. And then you can also choose the right pricing strategy based on that. You can do profit planning. You can decide, in the next 3 years, we are investing in building this new market. We may not be making profits. We're going to be working to make sure we're at break even, but we target so that we penetrate the market and we're stabilized and we're known in the market, our brand is visible. Then we can know that from year 4, we start pushing profits because we've done that. But you cannot make those decisions if you don't understand at what point does my business expenses equal my sales. So that is the importance, the major importance of a break-even point, to help you to make the good decisions about your business. Decisions. Also, it could help you with de-risking your business. You know, if you are running on this trajectory of break even for the longest time, you're losing on opportunities, you're losing eventually. Your costs will outweigh your sales. So it makes you say, I need to push my sales strategy. How do I sell more? Okay. Then the last, but not the last, but second from last, it is the last, is the value-added tax. We added it for you guys as information that sometimes as small businesses, we do not know whether to, what is this value-added tax? So this is a tax that is levied on products, some products and services. It is a tax that is belonging to government. It's money really that is traded between suppliers and consumers of goods, but it is collected for government. It's for tax purposes for government. It's not income for the business, for any business charging it or business not charging it. So value-added tax is currently levied on certain products. So you will see when you buy your products from suppliers. So you buy your inputs. Let's say you are buying bricks for building. So you will see there will be a value-added tax figure there. So why we're mentioning it here is that when you are doing your pricing strategy now, you need to be aware that you should not use the figure that includes value-added tax when you are saying you are profitable, because profits, the tax figure is not your money. The money transacts out. It has to go to the taxman. So VAT, you need to be aware there's a 15% that's levied on products that you buy, and also you may be registered as a value-added tax vendor. So you are also going to charge customers value-added tax. As a small business that is turning over $1 million and below, you're not obliged to register for VAT. And every time I always say, stay away from VAT if you are not at a consistent annual turnover of 1 million, because it's just a lot of administrative work. And what it does is that if you don't have the systems, you fail to comply, you lose your compliance, you lose your relationship with the taxman, which we do not want to see. So there's a basic calculation. It's in the book. We've got the calculation there in your workbook, so we don't need to go into details for the value-added tax. That was me.
Right. That is a mouthful. More than a mouthful.
Absolutely.
But it is one of those things. It's as we start use these tools, they demystify it and become very useful. So that is what we need to start to do. And we are very fortunate that we're not left with all the information shared today. Yeah. We've got our coaches and we've got each other to work through these things. So, but this is going to be very important. There is an assignment coming too. Maybe we can just share that before we go to Liabona as our guest. Oops, I must just get to the right slide here and that we can share that. And that is for you to do a sheet, which we will share in the WhatsApp group. The assignment is that you must complete your costing and pricing sheet, and there's a Word template there that you can use. So you can download the document, you can fill in all your details, and then when you submit the assignment by Tuesday, October the 1st, which is next Tuesday, at 12 o'clock, you will earn your BusyBucks too. But more importantly, you would have gained a lot of insight in terms of your business. So thank you very much, Patricia, for sharing that with Liabona. And let's jump into that. We'll come back to the submission of the assignment just now. But welcome, Liabona. Great. Thank you very much for taking the courage to step up and say, I will participate. And as I said earlier to you, it is when you step up with the courage that you learn more and that you can take back more. So, but I'm going to hand it back to you, Patricia. So just to very briefly in 5 minutes, sort of for us at the end of Liabona's business, sort of how do these costing and pricing considerations apply, and what can we learn from applying that?
Awesome, thank you. Oh, sorry, Liabona. I would like you first to introduce what you do in your business. Just capture that first short minute, and then we can get to the context.
Hi everyone, my name is Liabona Koshibana. I'm a licensed and qualified plumber, and the name of my company is Bonao Plumbers. So I specialize in residential and commercial plumbing, including maintenance, installation, and repair. So the goal is to deliver efficient and reliable work that is cost efficient, and also have solutions to you as a client, so that I give you proper plumbing solution that is safe, and also solutions that also are smooth, and also that you have a system that is running perfectly fine in your house. Thank you.
Awesome, well done. Look, Liabona, you are here in this journey. You're part of this cohort. Just from what you've learned today, but where you started, we would like to understand when you started. Were you very clear about your pricing? If not, what happened? If you can share with us there when you started.
So when I started, I was not clear with my costing, because sometimes when you do business, you're just doing business because you wanted to do business, but there are hidden factors that affect your business, which is costing. If you do not know how to cost your business, it means you are running your business to the ground. If you don't know how much your product is and how are you going to provide your services, because sometimes you forget to include petrol money when you have to go and deliver your plumbing service to a client. And then when you go back calculating how much money you've made, it just means that you have run your business to the ground. So now from what I've gained from when the program started till now is that I need to go back to the drawing board and know what are my costs, and I need to have them, because that will help me with my financial management, and also know my operational efficiency. Is my business efficient or not? And also that will also help me know what am I marketing for and the sales that I make as well.
Amazing. You mentioned very important points. The one is your ability to stop and understand what were the direct costs of your business. And you're talking to the topic to say, without knowing those direct costs, you were always assuming you're doing fine. And a lot of small businesses, we find them in that space where they assume they're doing fine. We talk about recording these things now, documenting, because there's one thing to know it up here, but there's another thing having it documented. How do you keep that sort of picture so that a next employee in your business will know how much do we charge for this? Because that's very important. Talk about that.
So when I do my costing, I use I do have my invoices. So so I also do the traditional way of doing the invoices, which is I write down everything that I'm doing in the business. And also I use Invoice Maker, which really helps me a lot because it's on my phone. I just download the app, and then it has all of the jobs that I've done, all of the services I've provided to my clients, and then it calculates how much profit I've made. And then the traditional, it just helps me with my filing that I have made this amount money, or the amount that I've made in a certain month.
Okay, so record keeping has played a huge role for you, but you also mentioned something called you said business efficiency, and we heard that it's also linked to costs. How are you, what is it in your business? What is efficiency in your business?
Efficiency is having a streamlined processes, ma'am, which is you standardize your workflow, you reducing the waste and optimize the resources allocation. So what we basically do is we have productivity, we monitor, and then we monitor the work that we do, and then how much does it take, like calculating the hours that we take doing that certain job.
Okay. All right, you speak of big words, but before I ask you the next, maybe the last two questions, I want to ask if there's any one or two questions from the floor for Liabone. One or two, raise your hand and we can give you an opportunity to ask Liabona, questions about running the business and the finances and the costing. We don't have questions from the floor. Tebogo.
Hello.
Yes.
Yeah, I'd like to know how does she calculate her labor when working with a client? Because when it comes to services, like amounts of work differ. So I'd like to know, how does she stretch the labor or take it down? Or because I'm also in a business of service, so I need help with that.
Awesome.
Thank you, Tebo. So what I've done, I've done research on the benchmark prices. So first of all, as a service provider, you need to have a call-out fee. So the call-out fee, in my understanding, is that it will cover your petrol, right? And then after that, you'll have you look at your revenue streams, which is I provide e-service calls, which is an hourly rate. I charge my clients on an hourly rate depending on the job that I'll be doing. I also have a flat rate, which is, let's say I'm doing a drain cleaning. That is a flat rate, it's never going to change. And then if I'm contracted for maintenance agreements, then there's a certain fee that I charge. And then also I separate new installation and renovation. So there's different prices for each and every segment of my revenue streams, because I cannot charge the same prices, because sometimes you'd have a client saying, I've got 3 taps that are not working, but now you can't say I'm going to charge 500 for each tap. So you need to charge that. You need to charge the client a service call, which is the hourly rate.
Awesome. Thank you, Liabona. Pule, was your hand up?
If we can maybe put the questions that we still have in the text chat.
Okay.
And then we can catch up with them. We also have the WhatsApp group to do so. We are running fast out of time, and we want to respect time as much as we can. So I'm going to ask first, and we're going to come back to the topic just now, but firstly, I'll put in the text chat link for your, oops, that's the wrong link. I'll get the link quickly. Or I can maybe ask Rashida or Amanda to type the quiz link into the text chat, please. Remember, this is the quiz at the end of each of the workshops that show that just ask you the questions about what we've covered and so on. So if there are things that we've missed that are important, that we can pick up on those. So specifically, the coaches can pick up them, and we can also share more content and so on in the WhatsApp group with you. So that just click on that link, please, the Learn Biz Quiz 4 link. It's quick. You can complete that very quickly. And then before we come back to talk a bit more about the topic of today, I'm going to ask that Rashida just runs us through to some of the most important administrative things. Rashida, you all know by now very well. just very quickly, there are certain things that we already know in the program and that we can pick up in the helpline and so on. So if you just want to quickly, where are we now with the coaching and other things coming up? If you can share that with us, please.
Yes, no problem. Okay.
We
Oops.
see you.
My
Oh, there we
background.
see. Yes.
One second. My background's just loading.
But we can see you well.
Okay, so one quick thing. So the main things around coaching is you now know that you are heading for coaching week 2. Tomorrow we start with coaching week 2. You will get loaded with additional data by tomorrow. So you'll have a weekly data bundle, similar to what you have been loaded with today. And that data bundle, please don't use it for anything else other than your session with your coach, which you will, of course, be contacted by them to schedule with you if you have not done so already. I know many of our coaches have actually booked all the sessions in advance. So your data will be loaded by tomorrow for that. And then yeah, just some feedback. When you are doing forms, I know there's been a little bit of confusion around forms. I just want to focus on 2 forms. We're running out of time. The 2 forms that you have to differentiate between is the participant feedback form. So the participant feedback form is completed after your last coaching session and the peer forum is complete. That is your feedback for the entire program till that point, right? Whereas your session tracker is a very quick form. It takes 1 minute to do. It's almost like, think of it as a register to confirm, a digital register to confirm that your coaching session has happened. So when you're in the coaching session, best to do is to get it out of the way if you can, or at least spend the last 5 minutes of the session to do that session tracker, because that tells us you had your session, your coach has made contact with you, and we don't need to sort of hunt or check that your coach needs to visit you. Okay, so that's the 2 most important. And then also with other forms, make sure when we ask for entrepreneur name and surname, please put your full name, not just surname, also not just name, because we do have quite a few different people who have the same name. So it just makes it that easier for us to identify that you've submitted your forms. We are doing quite well in terms of assignments, I must say. There's 92% of you who did assignment 1 so far, 85% of you have done assignment 2, and 74% of you have done assignment 3. So again, that you had to do it by the deadline would have, of course, earned you busy bucks, but it does not mean that it's too late for you to submit if you have not already done so. And if you want some more details or assistance, please do reach out to one of us, myself or Amanda. It's up to you. Yeah, you can just let us know. And then that was the main sort of feedback I took out from what I've seen this past program cycle. And just well done to everybody. It seems that this group is doing very, very well as a group on an individual basis, but as a group as well. So yeah, I don't think I have anything more to say. Thanks so much.
Great, thanks, Rashida. The upcoming dates, by the way, on that Learn Biz Info website, webpage, you can find all of this, like the upcoming dates and so on. And the important one, of course, is that we will just be after this event, we will post that template costing and pricing sheet for you to use. Download it as a Word document. You can fill it out, Google Word or MS Word or any app you can use to fill it out, and then submit it with the Learn Biz assignment submitter. So I think by now that's all. If anyone gets stuck, we've got the WhatsApp group to help us. I'm going to ask that we all switch on our cameras, specifically our guests of today, our presenters of today. Where are we? Bona, thank you so much. It makes it so much more real, if we have one of our own people, if we talk about the details. Patricia, thanks so much. I know sometimes we as entrepreneurs don't want to think about the figures and the percentages so much. We just want to go out there and do. But without those, clearly there's nothing for us to talk much more about than hoping things work out for the best. Another good plan, I think. But let's ask Nomvuyo to end our session first today. And then, guys, all the best for October coming up soon. end of the month, last week of September. Can you believe it? And we wish that the cold weather will maybe go away too, so that we can be out there. But thank you very much for a good session, Patricia. It's great learning. Keep on learning. Nomvuyo, over to you for the last word.
Okay, thank you. Thank you. Just once again, Liabona, that was really inspiring to see such a young entrepreneur doing such great work in your business. Thank you. And just a reminder that you are breaking gender stereotypes. Thank you very much. Thank you, Patricia. Thank you, everyone, for having attended. This was a great session. And for some of you, it could have been this session that really stretches you. Please allow it to stretch you. Do those numbers. Do those numbers. They are very important in your business. Thank you for being part of this program, and continue, because you were chosen, because you are committed. Continue showing that commitment. Continue showing that dedication. Continue showing that desire to make a difference in your community through your business.